Hello everyone, this is Nick Perry of Schaeffer's Investment Research with your chart slideshow for Friday, March 2nd. Today I am back with my weekly check of the broad market indices. If you're a regular watcher of these videos, you know I generally follow the same format. We look at the last week's daily charts and then we focus on this week's daily charts. I'm going to change that up this week because, well, frankly, it wasn't a normal week. We had a good deal of volatility. So I want to kind of step through a couple of different views and see how things are playing out. Just as a quick review, here's what we were looking at in last week's charts, the daily chart. They had been fairly quiet. Basically, we were talking about support, longer term in these levels. I was mentioning this and this, but basically the overall theme was we've had an uptrend with very little in the way of pullbacks. And in recent chart slideshows, I've mentioned the fact that we should be on the lookout for pullbacks because they do happen. We just haven't seen one in a while, and of course, we ended up seeing one this week. So when we look at the daily charts, here's what we have. Basically, talking about the SPX and the Dow. We were hanging around up here in these little stair-step patterns. Violent pullback brought us right down to the support zone we'd been discussing. The SPX is sort of flirting with that zone. The Dow broke below it and is trading just below it. As I've mentioned in the blog repeatedly, I tend to look at zones as areas. I don't, there was a time when I used to refer to them as, a support line, and it was a line in the sand, above it, below it, and my experience has been that there's just too much noise nowadays to get focused on a tick below and a tick above. Some traders may have success with that, but I found I was just getting whipped all over the place. So I tend to be a little bit more laid back in my approach to technical analysis. I'm basically looking at overall trends and, strength and weakness as opposed to a tick above or below a particular line. So in terms of the SPX and the Dow, we've got a pullback right towards these zones, and it's pretty much the same thing we've seen on the comp. Basically, it had tried to break above that little peak right there. We've got the gap low or below the 50-day moving average, but we're sort of holding right at these lows here. As far as the rut goes, I had been talking about the little short-term support there at the top of that range. That was violated. We broke right back down into this congestion zone right here, but it's actually still holding above this lower boundary right there. In terms of my overall takeaway from these charts, the decline we saw this week was ugly, but just trying to take an objective view, it's not detrimental. And by that I mean that you look at the comp and the rut that's at the bottom of these ranges, right? That they've been trading in. The SPX and the Dow, we did give back some of this recent gain, but I mean we've had one hell of a run here. So I mean to see some pullback is to be expected. Maybe you don't expect to see it all happen in one day, but as they to paraphrase the old saying, volatility happens. So my overall takeaway from these charts is that it's ugly, but it's not detrimental. But what I wanted to do was take a step back and focus on the weekly charts, talk about those. We haven't discussed those in a while, sort of get an intermediate to longer term view. Long-time regular readers of the blog may remember these charts, the support and resistance zones in gray and the red trend lines. This is something I haven't discussed in a while just because we've been in such a tight little trend that there wasn't really much to look at on these charts. So the volatility gives us a chance to step back and take a look at these. And basically what you see is sort of a multi-year view, and you can see that the uptrends that we've been in over the last 6-7 months are really stand out, especially on the SPX and the Dow. I mean, basically you had these peaks right here and pull back. You've got the low, which was the support zones. It actually more or less coincided. These uptrending trend lines have been drawn off prior lows. On the SPX, it actually goes back even further than what you see here. So basically you've had the peak here, you get the pullback, and then you break above these peaks, and then we've just had this extended run, and basically we got fairly extended from support. That's generally not what you see. We tend to see the stair-step pattern if you look back and you see these sort of bouncing. I'll highlight that. That's more what I would call normal behavior, and then you get the extended run, the low volatility uptrend we've had, and now we're basically seeing some give back on that. When we turn to the comp, we see you still get this uptrend here, but the breakout above the 2006 peak were much less. We got much less extent from that. Another way to look at it was the pullback from that peak was much more severe. So basically, you've got the pullback, you get the bounce, and we talked about it back in here, basically holding at these lows, and you get this extended run, and now we're pulling right back to these prior peaks. As far as the rut goes, it's sort of similar to the comp when you look at it in that regard. You've got the 2006 peak there, the early 2006 peak, the pullback, and then we sort of just consolidated. That's this right here, this circled area. That's the daily range we were looking at in the previous charts. And let me just clean these charts up here. Basically, what we've got now is a pullback that brings us right back to that support. I wanted to talk about these weekly charts because it offers a couple of interesting perspectives. If you focus just on the red trend lines, basically these are sort of connecting some of the prior lows, here and here, here. If you think about it in those terms and you look how far extended we are from those trend lines, we could see pullbacks, to these areas and still keep this longer term uptrend in place. Now that's obviously going to feel fairly traumatic if it happens in short order. And again, there's no guarantee that it actually holds there. But what I wanted to point out is we saw a little bit of volatility this week. If we do see some more downside action, we can go a little bit before we actually start hitting longer term support. Especially on the SPX and the Dow, we got fairly extended, from these peaks right here, and to see some give back is not out of the question. I don't know if I'm necessarily calling for a pullback to those levels. That's especially if you think about it in terms of the the comp. I mean, that's a good deal to fall. And if we do see that kind of momentum, it's going to be very scary to try to step in at that support zone. But basically, I just wanted to point out the fact that we did get extended from support. We've now seen a pullback, and just from a pure chart standpoint, in terms of overall trends, it feels nasty, it looks nasty on the daily basis, and for just one weekly bar it looks nasty, but as far as the overall trend goes, that's some pullback is not out of line. So this if one of the things I was talking about in the blog today is the percent of stocks hitting oversold levels, and the idea that when we see these pullbacks that start pushing a good number of the stocks into oversold, we tend to see clusters of signals. There's some churn in there. So basically, over the next week or so, it wouldn't surprise me to see some back and forth as things start to shake out. So it's definitely going to be a fluid situation here for the next week. So stay tuned to the blog, and we'll keep you updated.